Hey everyone, I'm James Trano. I'm with Senné Real Estate. Cassie will say hello. She's behind the screens.
Hi, everyone.
This is typically how it works. I'm standing here with our three presenters and I'd like them to all introduce themselves.
Hi, I'm Christine Bernardini. I'm a real estate attorney at Touchstone Closing and Escrow. We have offices in Andover, Boston, Chatham, Framingham, Newburyport, Reading, and Salem, New Hampshire.
And I'm Fred Allard. I'm the sales manager of the Waltham branch of Mortgage Network. Similar to Christine's firm, we're located up and down Massachusetts and as well as the East Coast.
And I'm Stephen Sala, Stephen Home Inspection, Commonwealth, Mass. I'm a home inspector. I'm a sewer engineer by training, and I've been doing home inspections in the Boston area for 30 years.
So everyone, you can see that we have people that are professionals in their field. They understand what they're doing and basically how you can become a homeowner. There's a lot of different steps on the way to signing that final document at closing. Each of them involve these people in that journey. I mean, obviously you need to get a mortgage, so you need to understand what you can afford. When you're at that process when you find a home, you're gonna need someone to go through the home thoroughly to make sure that that home is gonna suit your needs and that there's no physical defects in the home that could hamper your livelihood and enjoying that home. And of course, Christine's gonna bring it home by making sure that all the documents involved with signing that final piece of paperwork is complete and accurate, and anything that has to do with insurance and everything, she will make sure that it's done correctly. Now, we're going to have a discussion, not really a discussion, excuse me. We're gonna have a seminar where each of these people will tell you a little bit about what they do, experiences that they've had along the way, and what you need to do before you considering buying a home, steps that you need to take in order to become, an educated homeowner. So we're going to start off with Fred, because Fred is, taller than all of us.
Thanks, James. Thanks, Cassie, for inviting me, and thank you everyone who's able to participate both in person and online today. My name is Fred Allard. I'm a 20-plus year veteran of the mortgage industry, served on both the broker end and now on the retail end of lending. Started my career in real estate as a realtor back in the late 80s, early 90s with Century 21, and realized quickly I love the industry, but I like this end of it more, and so here I am today. So, for me, I try and simplify the process. When I'm meeting with a client, it's important to really run through, the 6 things that I consider important in buying. That starts with the goals. The goals are very important. And in our initial discussion, we're going to talk about, what you're looking for, where you want to be, what's your 5, 10, 20-year plan, whether it be regarding building a family, growing up in a particular town, etc. So we establish those things right away, and once I have a better feel for that, I can really start the process in the discussion of getting you on the right road to finding the right mortgage within your means, within your comfort level, in the area that you're looking to buy. In establishing those, once we've established those goals, now we have to review, capabilities, and income is first and foremost, probably the biggest capability. And we look at, if you're a self-employed borrower, if you're a W-2 type salaried employer, if you're an hourly employee, if you're a part-time nurse that works 30+ hours a week, so not technically full-time, how do we utilize that? So everybody has a different source of income, different way of making a living. And again, as part of this process of understanding your capabilities of buying, we're going to talk it through so we understand exactly what we can utilize and qualify you based on. And when it comes to qualifying income, typically we're looking at around 45% of your gross monthly income is what lenders will allow, both Fannie Mae, Freddie Mac, and most other banks, to go towards your home purchase. And that would be your mortgage, your taxes, your insurance, as well as other expenses, your student loans, car loans, credit cards, etc. So once we determine that amount, we can back into where that relates to a mortgage, and then discuss your down payment and what you have for funds, and then start really going back to the goals of, okay, we need to get to X in a lot of cases to get you what you're looking for. But again, the conversation, the whole pre-approval process, that's what we're able to establish. And by the end of it, you're that much more comfortable. You know, so in addition to the income, you know, we have to look at the credit. And, you know, with the credit, you know, credit scores, you see on the presentation, the different levels of credit. You know, the higher the credit, really helps determine, where your rate's gonna be at. You know, someone that has that one of those 740, the highest tier and above credit ratings, they're gonna get the best possible rate available in the marketplace. When you're starting to work from like that 620 in the 680 range, that limits your capabilities a little bit. And you know, and those are things that we want to look at right away, because that is, again, is a factor in your rate. And we want to make sure when we're qualifying, we use the proper rate to get you what you want. So there's no blips, you know, once you find a property. You know, in regards to credit, the other part that's important in the pre-approval process and is pulling the credit. And, you know, keep in mind, when you have a mortgage credit pull, this is one of the most common questions. When people, if I have my credit pulled too much, it's going to hurt my score. Well, when it comes to a mortgage, you can have your credit pulled, and you can actually, for a 2-week span following that initial credit pull by a lender, any other lender can pull your credit. Because it's understood, frankly, that from the bureaus, that you're only going to have one mortgage. And so unlike other types of credit, mortgage credit pulls and inquiries is okay within a 2-week span from that initial credit report that's drawn on you. So don't be fearful of having your credit pulled for a pre-approval process, because it really won't affect your credit at all. And what we determine in that credit is we look at it. Are there things on there that does everything match up with what you're aware of? And more times than not, there's a situation that we can fix internally with your help to make that credit issue that might have gone unknown get fixed prior to making an offer on a property, which can mean two things. One, it clears up the issue. Two, it can probably help improve your credit score in many cases, which is a service we offer free of charge. You know, next up in the process is we talk about assets. You know, what do you have for assets to put down? You know, and when it comes to assets and you know, you can have as little as 3% down. And, you know, if you're a VA borrower, if you're a veteran of the services, you can buy with a 0 down. So again, we're going to talk through all the different options you might have available based on what your capabilities are, what you're willing to use, and again, what your goals are. Where do you want to be? How much do you want to have left over once you buy, in case you have to do some work, etc., to the property? We're going to discuss all the parameters of the process as the discussion goes on. You know, and it's very important to kind of relay that, because it's really an important piece. It's a building process as we pre-approve. And then obviously collateral. What kind of property buying? Are you buying a single family? Are you looking to buy a multifamily where we're going to be able to qualify you, adding some rental income as well from the unit that you won't be living in? You know, in those cases that allows you to buy a bit more, because we can take a portion of the expected rent and add that to your income for qualification purposes. So again, those are factors we're going to discuss. And then the property itself, property, we have to make sure that as part of the loan process, once you go forward with financing, the property is going to appraise at what you're paying for, and that's the appraisal part of the process. In buying is a protection for you, because if it, for some reason, comes in below the purchase price, it's an opportunity for you to figure out your options, discuss with the seller, potential renegotiation, things of that nature. But you know, that's like the end piece. You know, probably the easiest part of our discussion is that. The harder parts and the more back and forth we're going to have is when we're talking about, you know, your income and your assets, and then going right back to the beginning. What are your goals? How can we match up everything you're capable of doing to get you within your goals? And that's by the end of our assessment and pre-approval process, you should hopefully have a comfort level of, okay, here's where I'm at. I can go buy right now. I need to get X, Y, and Z in order, or I have, you know, I'm a year away. I'm going to save some more money. I'm going to have more of a cushion, so when I do buy, I feel comfortable in the whole process. And it really helps you kind of just get a handle on what you need to do and what you need to be ready for down the road. There's so many, even despite today where there's so much information available online and in the media, until you discuss your situation, you don't really know. And people just, they have a lot of thoughts, a lot of questions. There's a lot of back and forth every time we have a meet with a client for the first or second time. And that's what it's all about. And there's no obligation. It's just, it's a service we offer. You know, a lot of times the client will be coming directly from someone like James or Cassie, who's been showing them homes and wants to make sure they're ready to take the next steps. And that's what we're here for. You know, and then once the time comes, you find a home, you make an offer. We're part of that process with you, with making the offer, putting a pre-approval letter together for you, so you can be you know, ready and able to buy on a moment's notice. And that we do that 7 days a week, all the time. You can ask James about that.
I'm sorry, I'm walking on camera.
Yeah,
Just to see.
sure.
All right. We heard a lot about the things that go into making a mortgage.
Yeah.
And what a client should do. What shouldn't they do?
That's a good question. That's a great question. And, you know, and
we all know the person that wants to buy a home, and once they get that mortgage pre-approval, they go buy a car.
Right.
I mean, that's adding more debt onto themselves and making an additional payment, and that could skew.
Yeah.
The numbers, right?
well, exactly. And what we do as part of our process, is a great point that you brought up that I can elaborate on, Jeff, is, you know, regarding that, you know, we do talk about, are you planning to do anything in the future? Are you buying a new car? Well, you know, a lot of times when we do review that credit report, we'll see a loan payment that might be coming due. What's your plan? Is it a lease? Is it a purchase? Are you buying another one? Are you getting rid of it? Are you paying it off completely? What's your intent with that auto and or, you know, credit card? And we discussed that. And in the process, you don't want to take out any new debt, but if you need to for some reason, just discuss it with your loan officer and make sure that it's not going to be an issue in your financing. Many times it's not. And once we have the discussion, we know what to expect. It's a non-issue. Completely.
Okay, I have a couple more questions.
Sure.
Just throw them out.
Sure.
I mean, like open
That's what we're here
discussion.
for.
People that are looking to buy homes often feel concerned about debt that they have or credit they have exposed themselves. How do you feel about people that have credit on credit cards, but it's not utilized? But I've seen some people say, well, I know I gotta buy a house, I want to free up credit, I need to close credit cards. I don't think that's usually the best thing to do, because that shows that they actually are credit worthy.
You know, the credit scoring models are constantly changing. You know, as you may or may not know, there's 3 bureaus that we work with, a TransUnion, Equifax, and Experian. And for lending purposes, we utilize the middle credit score of the 3 once we pull credit. And they all have slightly different models that we work off of, but for lending purposes, those are the 3 bureaus that we work with. That's all lenders, and they all kind of use the same criteria using that middle credit score. But to answer your question, oddly enough, you have a credit card that you close out, that could actually affect your score negatively, temporarily. It would be a temporary thing, but it could actually have a negative effect on your score. So, like, again, we don't want people to make changes dramatically in their credit at all, especially once they initiate a pre-approval and or accepted offer. If they want to make changes after the fact, the day they close for that matter, that's fine. But while we're in process, we like to keep things on the same page that we started at, so there's no blips along the way.
All right, and as far as employment is concerned, all right, you're looking to buy a home. You've worked at the same job for 5 years. A better opportunity comes along and you're thinking of moving your job. You're in the middle of doing your approval process for buying your home. What should someone do? Should they? Do they delay taking that new job? Do they have to be employed for a certain amount of time before they can be reconsider, or how does that work?
It's very important to start making sure you tell your loan officer, because that, you know, that can be an issue depending on what the delay might be, right? But in typical circumstance, if someone's making an improvement, they're staying within the same industry, it's a salary position, and it's an improved salary position, it's a non-issue. We just need to know, because we are, you know, our applications, they all have to be kind of dotted properly. Where are you going to be really gonna be employed the day you close on the loan. That has to be what's on the application, right? And so, but in many cases, you know, someone, they're leaving one job and starting another.
Yeah.
And they haven't started yet with the new position, but we know about it because that's part of the process. We're gonna find that out. The offer letter can be, as long as we have an executed offer letter from the company,
Okay.
we can work with that to utilize that, you know, that income if we need to, et cetera. So we can work with those situations, but again, keeping the dialogue open at all times, you know, at the time of offer through the time you close is critical to ensuring a smooth process.
And sorry, everyone, one last question and then
Yeah.
I'll let
More
Fred
than
go
that.
and then we'll
More than
get
that.
Steve up here. We actually ran into this a while ago, and I'm not sure if you remember. We had a person that was in Canada who wanted to buy in Massachusetts. Now, they had not been working in states. So it was a question of, what does someone do when they're moving into this country, Cassie? And they
tough.
want to buy their first home. Do they have, how long do they have to establish credit? What do they have to do to establish credit for a mortgage in this country? When moving here.
It's a common issue when someone first comes to the country,
We see a lot of people coming into the States now, and that's why now.
yeah, and you know, there's a lot of, like, say, Canadian citizens who work for US companies, but they live in Canada. There's situations like that where they might have to get transferred down, things of that nature, and you kind of work with that, and they have a Canadian credit history. Sometimes we can use a European and, or I say Canadian credit report, to establish that payment, criteria, et cetera, that their credit is worthy. If we know it,
a job, so you can show the job.
as it's saying that the same rules apply when it comes to the income. But when it comes to the credit, we can help them establish credit right away. So if they're 6+ months away from buying, people can get credit cards that are secured by a deposit or something like that. Something that gets them their feet in the door, helps them establish credit right away. You know, so they can take the next step. But we work with that, and one of the benefits of Mortgage Network is, you know, we're conforming. We're a mortgage bank that we lend our own money for, you know, conforming Freddie Mac, Fannie Mae type loans, as well as FHA, VA, et cetera. But what our most valuable niche, especially in the Massachusetts area, is we're a very large portfolio lender. That we work with a number of different outside banks up and down the East Coast that have an appetite for certain types of loans. And a lot of times they'll listen to a loan with a story. You know, so someone like a Canadian citizen that hasn't established credit yet, but they can show that they have a strong history where they came from.
Yeah.
They're employed in the US, they make, you know, their income is sufficient, et cetera. They check every box from a criteria standpoint, but the credit, we can potentially work with that, you know, and whereas conventionally this doesn't work. So that's again, part of the discussion, part of the knowledge, and we're always working with unique scenarios every single day, especially in this term.
Well, see, we're getting information that you probably wouldn't have gotten, and this is why we're inviting people here that can talk from various points of view, especially within the industry that they're coming from.
Yeah.
We're gonna probably invite Fred back later on to talk about adjustable rate mortgages.
Yeah,
Because we
we
posted something up about adjustable rates this morning in a couple of social media platforms. But it's not been a discussion that we've had because that's something that home buyers are now looking towards for making their first home buying purchase, because the conforming 30-year mortgage has gone up a bit. So it gives them an option, right?
Yeah.
All right. So thanks, Fred.
Thank you.
Really appreciate it.
Thank you.
We're gonna welcome Steve Sala here.